Have you ever wondered if that insurance, that protection that you have on your mortgage, your loan, your lines of credit, your credit cards are actually worth the money you're paying into? Let me explain in my daily dose of realistic financial advice. Stay tuned. So, today I want to talk about 4 different misconceptions that most people have about the insurance that they have on their various debts, like their mortgage, their line of credit, their homeowner line of credit, their loans, their credit cards. Somehow, the banker that gave these to them, or even the lender that has given these peace of mind protection products to them, have convinced them that they're good. Which I guess at the same time, we can't blame them, because a lot of these people who work in the banks or at the lenders, they don't know actually a lot about the insurance industry because they work for the banks or they work for the financial institutions. I'm here to tell you that I have experienced both sides. I've worked at the bank for 20 years as a branch manager for the same company for 20 years. And then I jumped ship and ended up becoming an insurance broker. And I can tell you with this advice that what you've been sold with your lending product is not going to be the best option for you. And I say that with confidence because I know what could happen if you keep that insurance on your lending product. The first misconception that people have is literally they think it's a charge on their statement that they think they have to pay. So somebody has obviously not done their job to properly explain it to them. Probably because it was maybe a form they had to fill out that they were mailed. Hey, protect yourself, get this. And they thought, this sounds interesting. I don't have this, so I should fill this out. And sometimes it's a form online that's really easy to fill out. Sometimes it's a phone call they get from a marketer that's working to sell these products to the person who already has this debt. And they try to make it sound like you got to get it because you're going to leave this debt to somebody else. And so they think that it's something they have to pay. So they never question the charge on their statement. In fact, when I look at people's statements or when I tell people, do you have balance protection on your line of credit? A lot of people assume that they don't. And then when I take a look at their statement, I see that, oh, you actually have a charge here on your credit card statement that says balance protection. Do you know what this is? They just assumed it was a charge that they had to pay. They never questioned it. And so let's take the second misconception. They think that they don't have to worry if they do get an illness or they get a disability or if they die, if they have this kind of insurance. So that's another misconception. Of course, that would be the opportunity to take this product, right? Peace of mind. You don't have to worry. But the misconception is that these types of insurances on these credit cards, even if they're backed by a big insurance company, guys, and this is where it becomes a bit of a question mark. These companies could be legit life insurance companies, like you've heard of them. They're legit life insurance companies that they offer these products through the banks. But where you actually have to take a look at is the fine print. I was actually just looking through a very old certificate of insurance for something I had with another financial institution. I'll try to cover up the name. And reading the fine print. Now, I'll tell you the truth. All I did with this thing when I got it was file it away. Okay? And this is when I was a banker. Okay? And so I filed it away and just think, okay, this is my certificate of insurance in case I need it. It's in here. But I never really read it. Okay? And one of the biggest things is that it says at the page 15 of, I think, a 23-page pamphlet that if I had missed any information, basically saying if I didn't answer a question properly, a misstatement, it doesn't matter. They could consider the contract null and void. And the thing is that some of these long ass Health questions are just so convoluted, and maybe some of you guys can relate. They're so convoluted that you could easily miss something. So I should have to worry if I took one of these products again. I should have to worry because some of these questions just don't make any sense. And by the way, guys, if you do have these products, or I should probably say, if you don't even know if you have these products, and then you find out from your statements that, oh, what is this protection thing? Look for the word protection or insurance, by the way. I want you to click the link below, reach out to me so that we can properly understand what you have and properly understand if what you have is sufficient. And maybe there's an opportunity for you to save money and have peace of mind. Okay, so click on the link below if you want a free consultation about what you have and if we can save you money and if you actually need what you have. Okay, so that is the second misconception, is that people think they don't have to worry if they have it. Okay, and the thing is, it's funny because this insurance was on something very small. It was on a line of credit that might have been $20,000. And that's the thing, is like all it covers is the line of credit, the balance of the line of credit at the time I die or at the time I get disabled. Okay. The premiums is the third misconception. The premiums will stay the same forever. Now, if you did the calculations on one of these products, a lot of them, including mortgages, guys, because mortgages renew every 3 to 5 years. You have to go back to the bank to renew it. But if you were to look at how they calculate the premiums on a line of credit or on a credit card, it's based on your age, and we all get older. And as you can probably guess, premiums go higher the older you get. It's based on the balance, the statement balance at the time. So if your balance is, let's say you are to the max, $20,000 owing on your line of credit, your premium's going to be high on that month. But let's say you pay it off the next month. Well, of course, you're not going to have any premiums because you paid it off, but you still paid the highest premium in that 1 month because you had it maxed out. So the premiums are going to be basically variable. You're always going to have a different premium every month. And for the case of a mortgage, unless you want to stay with the exact same mortgage company, the exact same bank for the entire life of your mortgage, which most people don't, they try to find the best deal in terms of their mortgage rate, your mortgage insurance is going to go up because you're going to get older. Your balance may not go down. Your mortgage is going to come down, but you're going to get older. And when you go from bank to bank and you still want to keep this mortgage insurance, you're going to basically pay more because you're older. Okay, and you're going to have to answer their health questions as well. You may not even qualify based on your health at the time you apply again. And then the fourth misconception about having insurance on your mortgage, loan, line of credit card is like other insurances, like life insurance through your life insurance agent, okay, where you had to get your blood done, your urine test done, your blood pressure done. Sometimes they think that this will be guaranteed to pay out if something happens. But I'll tell you this, if for instance you took out balance protection on your mortgage, for instance, and something were to happen to you, if they found anything to contradict what you had answered on your health questionnaire when you did the mortgage application for life insurance, they will decline whoever it is that's submitting the claim for you, because remember, you're dead. They will decline them. So there is no other way to get all that money back that you paid into it for years and years, and you're still not covering the people that love in terms of not leaving them with a debt that they have to take care of. And I'm thinking of a mortgage, guys, because at the end of the day, that's the biggest debt that people worry about, so that if something were to happen to you, your loved ones wouldn't have to worry about taking on the mortgage and getting approved for it in their own name based on one income, and then possibly not getting approved for it because their income may not be sufficient enough to get the mortgage in their own name. So what will they have to do? Move and get a smaller place, or maybe not even get a place at all, depending on their credit worthiness. And so, guys, I just would encourage you to use the link below and really even just asking you the right questions to find out if you do have something. I would be happy to determine if you even need anything, and then cancel anything you're wasting money on, and then explain to you what you should have and explain to you what and how it works. Because I can almost guarantee you no one ever explained that to you. They couldn't have, because they themselves haven't read the fine print on the insurance product that they were trying to sell you. Anyways, this is another video that you cannot unsee. You now have the choice to fix this. Comment, subscribe to my YouTube channel, share this video with other people, guys, and let's help each other try to save money, help each other become financial independent. I got you all. Have an awesome day. Thanks for joining me.